Our stock spotlight is on Disney, and I'd like to welcome Brett Sifling, investment advisor representative over at Gerber Kawasaki. Brett, it's great to see you. So this is some really big news, right? So you have Bob Iger stepping down. He wants to be more on the creative side of things. And of course, Bob Chapek is going to take over. He's been there forever anyway. Is this a big deal or not really?
Yeah, well, it was a bit of a shocker when we heard the news yesterday. But at the end of the day, I really don't think that it is huge news for the company. Chapek is their operations guy. He's been there, like you said, for 25, 30 years, and really has driven the growth as far as parks and things have gone for Disney.
Right, absolutely. As you said, he's been heading up the parks. They've worked closely together. They know they're on the same page. But this is a very interesting time. So Chapek comes in, and he's going to be now the 7th CEO in 96 years for the company. So I thought that was interesting. But this comes on the heels of what Bob Iger has had in his legacy, right? You have Marvel, Pixar, Lucasfilms, Fox. He's really built an empire. And now the world of streaming. What do you think Disney's prospects are for streaming going forward? And now with the new CEO head, your thoughts?
Yeah, they're all in on this streaming. You have Chapek, who has experience with Hollywood too, whether it's in studio distribution or in home entertainment. They're clearly all in on this, and they're expecting not to see really profits from this DTC segment over the next maybe 5 years. We think it could be a little bit sooner, possibly in 4. But exactly what you're saying is Iger's really coming to focus on content. In the post-Skywalker era and the post-Avengers era, they really need to make sure that their intellectual property is going to be carried forward over the next decade as they roll out this Disney Plus brand.
I think it's really interesting because you noted, right, that it fueled speculation. Why did Iger do this? Does he have a health issue? Does he have political aspirations? So far, I haven't heard anything like that. I just heard that he wants to have some more thoughts on the creative side, less on the day-to-day business side of things, and that's why he took the role for this executive chairman immediately.
Yeah, it's hard to tell. Some were saying, maybe he had political ambitions, like it was going to be a Bloomberg and Iger running. I don't think that necessarily that's the case. I think that he just wanted to kind of speed up the succession plan. I mean, look, he's 70 years old, but he's also going to be there for the next 2 years. And Chapek is literally answering to him over this time. So in a sense, he's almost even trying out for that CEO position. And the board can come back in a couple of years, and if all else fails, really just beg Bob to stay there.
So Disney today is down 3.25% on the heels of the news. Of course, the market has had a lot of volatility, to say the least, but in fact, the Dow is higher today. So at 123, it's well off of its highs. What do you think Disney's, is this the kind of stock you guys would get into for the long term? I mean, Disney was such a darling last year. Everybody, every time I asked a guest for a stock recommendation, a pick, they would say Disney. And it kept hitting highs. Now it's a different story. Do you think it's at a good price here?
Yeah, I'm definitely still a huge bull on Disney. I think that the story over the long term hasn't changed. We have these headwinds like the coronavirus and now this news that we'll work through over the next quarter or two. But the long-term story of Disney Plus and shifting to this direct-to-consumer brand is still there. And I still think that once this kind of gets out of the way, that it's still a $180, $200 stock.
Okay, so $180 to $200 stock. So it's at 123 today, and you think that fair value is way higher, 180, which would be 200, which would be an all-time new high. How long do you think that those kinds of targets of 180 to 200 is that? 12 months, 18 months? What are you looking at?
Again, we're going to have to see how this coronavirus plays out. I mean, they're saying if the Shanghai and Hong Kong parks were closed for 2 months, that's about $150 million operating income. You've now got this news that they have to work through. It really depends on the overall market, and that's the difficulty with picking individual companies like Disney versus, the entire segment, you could say.
Give me a streaming service thought, your final thought on the battle in the world of streaming services. We know that people will have at least one, may have up to four. Give me your thought, your forward-looking thought on the world of streaming services, Disney and the battle.
Yeah, streaming's here to stay. I was on here a couple months ago talking about it was the official death of cable TV when Disney Plus came out. I think, Netflix is going to continue to be a household name, but if you have kids, you're going to have Disney Plus. It's going to be another thing in your arsenal of streaming services that, you're just going to have as a young person, especially in today's economy. That cord cutting is absolutely prevalent still.
Does HBO Now stand a chance at $15 when everything else is $7 or $5 or $12?
Yeah, that's definitely a challenge. This HBO Now, it seems kind of expensive given the relative value of the other streaming services. You also have to remember that a lot of people share these streaming services too, right? They're not actually just paying for each one individually. They're likely sharing with their friends and family members too.
Right. But isn't the Friends regroup going to happen on HBO Now? Even I'll get it because I love Friends so much. So I think anybody would be willing to pay anything for that if you're a Friends fan.
Oh,
great to see
absolutely.
you, Brett. Our friend of the TD Ameritrade Network, Brett Sifling, investment advisor representative at Gerber Kawasaki. Thanks for joining us on the show.